Welcome back. Now, Emira's local portfolio has surpassed most key targets. Rising property valuations and the fair value equity gain from the company's maiden investment in Poland has boosted Emira's overall interim performance. CEO Geoff Jennett joins us to unpack this performance in a greater detail. Thank you so much for your time, Geoff. Now, we have seen a lift in your financial metrics during the reporting period. Just walk us through some of the key highlights there.
I think the most important part that we should always focus in on is our distributable income per share, and you'll see that that's up at 63.51 cents per share, which is a 6% and a bit increase on the comparable period last year. The other very key item that we should always mention is our net asset value. Our net asset value increased from 17.33 Rand up to 19.45 Rand, thanks to valuation uplift in the local portfolio, together with the bargain purchase gain that we've managed to achieve on our first Polish investment. That was absolutely key. Then our disposals have been significant in the last 6 months, and a lot of that cash has now come in October. So that sort of replenished our reserves that we utilized for the offshore investment. Our vacancies have improved down from 4.1% down to 3.9%. So the local portfolio doing nicely. Our loan to value is still showing at 42% as at the end of September. And that was before 1.4 billion of the proceeds came in October. So we're excited about what that's going to mean in terms of our LTV. But we think our business is in good shape, and we do go on record to say that we anticipate that our dips for the full year will be slightly higher, marginally higher than what our executive KPI target was that we shared with everybody of 120.4 cents.
All right. One of the interesting things that I've noticed with the property companies is that it seems that there's a mixed picture when it comes to the rental reversions. How is it looking on your side, or are you maybe seeing a different picture looking at the different portfolio areas?
Yeah, so we always find it interesting how other companies sometimes share such positive rental reversions. Across our portfolio on retail, office and industrial, we have negative rental reversions. And there's a reason for that, and that we are still signing escalations, yearly escalations of on average 6.5%. So if you start off with 100 Rand rental, you escalate that by 6.5%, you're going to be pretty much at 130 Rand. The market growth rate isn't that. So if the market growth rate was, for example, took the 100 Rand up to 115 Rand, at the end of those 5-year periods, you've got 130 reverting down to the 15. That's pretty much a negative reversion of 12%. So, but that's just the way the market works. And so we do see the negative reversions moderating a bit.
Yeah. But
until this economy starts to fire here in South Africa, where we get meaningful GDP growth that will help our tenants, I foresee that we will continue to have those negative rental reversions.
Well, actually, just talk to me about that, Geoff, because there is an air of positivity when it comes to the political landscape and also monetary policy. What are some of the pressures that you are seeing that are still kind of lingering and filtering through to the business?
So Zanati, I think it's important just to dwell a little bit just in terms of this change in sentiment here in South Africa. Fantastic that we're on government of national unity, lowering of interest rates, less load shedding, improved fuel prices, and all of those are key ingredients to enable the economy to perform. But having said that, there are still significant service delivery challenges on the ground. And unless those get sorted out, you might have the best properties, you might have the best tenants. It's very difficult for them to then be as successful as they need to when they're trying to manage all the things around them. The classic one, and we've been speaking about for the last 2 years, is the electricity side. So we're adding on another 5 PV farms. We're going to increase our megawatts that we deliver effectively through to our tenants, and we can do that. But there are other challenges coming through as well, just because the infrastructure has not been cared for the way it should have been over the last many number of years.
Is that filtering through to costs in any way? Because some of the property companies have spoken about an increase in cost creep.
So it certainly has. I mean, if you just go back to what operating costs were versus rental income 5 or 10 years ago, this has escalated and escalated significantly. When you've got operating costs increasing by between 5 and 10% every year, and your rentals, if you're lucky, getting 6.5%, you're in a cost squeeze. So there certainly are cost pressures. Interesting enough, this 6-month period, our costs didn't go up to that extent. And there's a reason for that, is because we didn't spend as much on diesel. In fact, we hardly spent anything on diesel in the last 6 months. So that was a certain nice little tailwind to actually receive, because that certainly has been much higher in the past.
Yeah. It's been quite interesting because the political landscape has so much impact in terms of business confidence, and you do have those the indirect investments into the US. And I'm wondering, because there's been an air of business confidence, and businesses really looking forward to the prospects that could come from the current leadership there in the US. Are you seeing that? Are the prospects looking better for that portfolio?
So our portfolio has been performing very nicely. Vacancies are still sitting at the 3.5% level. No issues at all in a strong economy.
Yeah.
And this change of government, but from the Democrats through to the Republicans, and the statements made in terms of the incoming president, should mean that there's more of an America first focus on the economy, which will mean that businesses should do better inside the US, which will be good for our centers. So it might take a little while, 6 months to 18 months, before that starts to filter through, but confident that that will come through. So, but there's always a big difference between saying things in election years versus actually what happens under the ground. And we've seen this before, but we certainly do think that there is upside for our US portfolio.
All right. Well, thank you so much for your time, as always, Geoff. Really appreciated. That was Geoff Jennett, CEO of Emira Property Fund.